Hello everyone, welcome to another lovely episode with JayFx. This is the seventh episode for the Wyckoff mentorship. And on this episode, we would be discussing about the market phases within the Wyckoff schematic. So basically, I've broken down the schematic when it comes to the practical aspect, explaining the technical and the laws behind it, how they work, how you can find this on your chart, and basically how it looks. So this is why we are currently on the episode 7. If you're new to this platform, this is an online Forex academy where I teach you guys how to trade the market using technical methods, for educational purposes. But these are methods which have been used over the years from multiple sources. So you can find that online. And we are just, giving our own um, view and also breaking down how I use this chart to find my entries using the Forex or the crypto market. Okay, so this is Wyckoff Mentorship. This is the episode 7. If you're new to Wyckoff, you can go and start from the episode 1. It would also give you a lot of insight into how this video work, because basically time is running very fast. We started this program about 2 months ago where I decided to teach you guys most of my concepts and how I use them on YouTube. So this is the Wyckoff mentorship. This is the episode 7. On this episode, we will be looking into the phases within the schematic and how you can find them on your chart. I've been giving you guys insights on how the accumulation, distribution, reaccumulation, and redistribution works, but I haven't given you guys a little insight into how the phases work, although they are similar within the schematics, but you have to also know when and where they fit in the whole structure stuff. So this episode 7 is going to give you insight on that and how and when do you trade the phases. Are you going to join the trade on the beginning of the schematic, or are you going to join the trade at the ending of the schematic? So we're going to be asking questions like that. And also we're going to be looking into how you can use the Wyckoff on the chart before, the schematics form. All right. So this is a suggestion from the Telegram community that we should do, recordings of multiple sections and have them online, to also boost the face of the academy. So the academy is currently on Telegram. If you're not in the Telegram community, you can join using the link in the description, where you can find other traders and individuals who share their ideas and thoughts using chat methods as well. So the link is in the description. And you can also get an ebook to the Wyckoff mentorship. There's an ebook which we created, and this is what I'm using currently, to read for right now on my screen. So you can have this ebook. It's for free as well, available in the Telegram community. The link is also in the description. Okay. So on today's episode, like I said, we will focus more on how the phases in the market works. So we have the phase A, B, C, D, and E on the schematic, as you can see. While we have this as each point of the structure, which was used to understand the Wyckoff method. This phases helps us to understand, where we are in at the moment, with the accumulation in the market, and where are we to find entries, to join in on the trend. So on these phases, within the ebook, we have them broken down, with the phase A being the stopping of the previous trend, which is the uptrend, which the market was coming from. Okay. In this is in a distribution, right? This is a distribution because the distribution happens within premium for the trend to head down. So this will be the end of this uptrend and the beginning of an accumulation. I'm calling it an accumulation because this is where, money is being accumulated. But the schematic is called a distribution, so you don't get confused on the terms I'm using. So this whole circle we find on the chart, this circle we find here, this whole circle is an accumulation and price distributing down, the accumulated entries from this schematic, okay? Using the ICT method of accumulation, manipulation, and distribution, you will find that the accumulation is known as, the first phase of the market where institutions accumulate price. Then we have the manipulation phase where institutions manipulate the market, and then we have the distribution phase, which the institutions start to distribute their entries from their accumulation. So similar to that is what we have on the Wyckoff, right? But the difference is that the Wyckoff has distribution known for the schematics you find on an uptrend, which is what we have here. An uptrend. The schematic you find at the ending of an uptrend is known as a distribution. While the schematic you find at the ending of a downtrend is known as an accumulation. Although this whole process is still an accumulation, manipulation, and distribution. I just want to get that cleared so you can understand what we're talking about. Okay, so the ICT method of accumulation, manipulation, and distribution is something that came out, but the Wyckoff has been existing long before that. Okay, so you should understand that the process of the ICT accumulation, manipulation, and distribution would also be influenced by the Wyckoff method. So the Wyckoff has different terms used for accumulation and distribution, but the ICT have this term used to describe one single pattern, which is the accumulation, the manipulation, and the distribution. AMD, okay? While the Wyckoff has the accumulation and then has the distribution separately. The manipulations happen within each of them, but they are both separate. So this is the difference between them. Now, understanding Wyckoff, we're not looking into ICT right now, so I'm just trying to give you guys the insight between why you have these terms and why you have them having different meaning, because they're different methods. But I'm telling you that there are similarities within them that you can use to, advance whatever method you're using, and also find entries while using both of them, because they are basically the same thing, just different perspectives, okay? So when it comes to the phases in the market, the phase A marks the end of the initial trend the market was in, which in this case, we have an uptrend because it is a distribution. If you've been following up with the mentorship so far, you would understand what we mean by an accumulation, a manipulation, a distribution, and a redistribution. All those have their episode 1, 2, 3, 4. They are all broken down in different episodes. So by now, you should have the basic understanding of what we're talking about. If you're new to the mentorship, just, go to episode 1 and then start afresh to get the proper understanding of what we're trying to say, okay? So, and the phase B, this phase is where we have the accumulation, which I was trying to explain earlier, which is the manipulative period of the market, where you don't basically find a particular point. Instead, you have price creating these highs and lows to, form a form of support and resistance to give you that insight on what the institutions are doing at the moment. The term composite man you see being used on the ebook is also referring to institutions, okay? So this is just another term which is mainly known to Wyckoff, right? So the institution term is kind of what we use on smart money concepts, but on Wyckoff it's more like this. So it's still the same thing, just, different terms. So the institutions gradually start to, accumulate price within this phase B, where you find them creating highs and lows, giving you insight to the support and resistance of this entire schematic that is forming. So the phase B is more of the manipulative period. You see highs get cleared out, lows get cleared out, highs get cleared out again, lows still get cleared out. So the phase B is not really a trend, it's where the accumulation of, retail traders is being done. So it's not the safest time to get in the market. This is the same for all schematics. If you're coming from the reaccumulation, redistribution, and all of that, they all have the phase B as the most manipulative phase in the market. The phase C is where we see the end of the accumulation, of the retail traders. The phase C mostly comes in with either a retest of the newly created direction, which the schematic will be heading. For example, on this, we have an accumulation. So this is an uptrend. You see, this is an uptrend schematic. An accumulation identifies the end of a downtrend and the beginning of an uptrend. So the accumulation is found on discount level of price. That's what I was trying to explain to you guys earlier. So we have the phase A, which is the ending of the downtrend. Okay. So we then have the phase B, which is where we see the manipulations kicking. Now, on this part, we find that price respects structure here, clearing out internal range high, according to, this is according to smart money concepts. So this would be clearing out internal range high, creating a new swing high. So this would be a lower high, a lower low, lower high. Then this would be a lower low as well. Okay, so this would be a break of structure. Now on the phase C, this manipulation is done. As you can see, they cleared out liquidity from here, then they broke structure from here. Okay, so this manipulation is done, giving insights to market structure traders that the price is still bearish. But understanding Wyckoff, you start to expect a changeover due to other criteria you have to confirm that this is an accumulation, coming from the characteristics of an accumulation, which I gave you guys in episode 3, where we talked about an accumulation. So the phase A, B, and C is to give you insights to where you are in at the moment when you're looking at the market. It's not to tell you how to spot an accumulation or how to spot a distribution. Okay, so don't get confused. These phases you see here are not here to tell you what to do here. These terms you see here are here to identify the movements, so you can also give insights to what the phases are telling you. The structure is what you use to understand, the change in character and, this sign of strength or sign of weakness. As you can see here, we had this lower high created here, but it failed to break structure here. Okay, so this is an insight that price is turning bullish. So this will be the first official bullish leg that was created to switch the trend to the upside. Okay, so understanding this now, this SOS means your sign of strength. The phase E would be the best time for an entry. That is, you can have your entry at this level and your stop loss below this low. Okay, so the phase E is the safest. But for traders who are more experienced with how to use Wyckoff, you can also get an entry from the phase D, understanding that this would be a lower time frame change of character, and then this would be priced respecting the internal structure. So this last point of supply would also be an entry level, with price clearing out this liquidity. I'm trying to use smart money concept because that's like the first mentorship program we did. I taught you guys how to use smart money concepts, market structure, liquidity, and all of that stuff. So I'm assuming that you are aware, of how the smart money concepts work. If you're not and you're new to the channel, you can go and check out multiple videos on that, so you can have insights on smart money concept. Then you can come back to, following up with the Wyckoff mentorship. But I'm going to be using a lot of reference to the previous videos because this is kind of like episode 7. So we are in episode 7 of this particular mentorship. If you're new, you're not expected to understand everything we are saying here. Go and watch the previous episode. Then you can catch up with us and then understand more of what is happening in the screen right now, okay? The videos are getting more advanced on each episode as we go. So you have to follow up with how I'm following up with the videos as well, because I'm trying to make it more understandable based on the episodes. All right, that's why they have these numbers. So you have to go back. If you're not understanding, just go to a previous episode, maybe one before this one, which is episode 6. Go and watch episode 6, get the insights, because on episode 6, We talked about cause and effect. And now, if we're looking at structure, you have to understand impulsive and corrective moves, which is the cause and effect aspect. All these we're breaking down on the episode 6. So on episode 7, we're talking about the phases. Once you understand the meaning of cause and effect, and you know how the difference between these schematics, you're now understanding the phases among the schematics. And then you know cause and effect. You're basically already there. On episode 8, 9, and 10, we would focus more on practical charts. Right? Those will be charts. We won't be breaking down patterns anymore. So by then, you should be more advanced with how the patterns work. So when I use this term or this term, you can also leave comments recommending, your ideas and thoughts from what you have learned from the previous episodes. Okay. So looking at this, phase D, as you can see, gives us an entry opportunity with the turnover of the structure as well. So structure turns bullish after the manipulation is done. And the manipulation is done within the phase B, as I told you guys earlier. So phase B is not the best time to get in the market. Phase C is the best time to confirm that you are actually going bullish and the schematic your identifier might be correct. Phase D is an entry opportunity time, same with phase E. But phase E is more of like the confirmation entry period. So this is accumulation, beginning, accumulation, switch, which is the change of character, okay? Entry opportunity, confirmation entry, okay? Beginning, the switch from one trend to the other. Accumulation, the accumulating of liquidity. The switch, the change of character from the previous trend to the new one. Entry opportunity, the beginning of the new trend. Confirmation entry, sign of strength, and it's safer to enter at this point. So this is kind of like the breakdown of the phases, how the phases work. So this is basically the same thing for almost all schematics. If you understand this basic aspect of it, you will be able to identify what's going on different phases. This is accumulation 4. As you can see, we had the beginning, very, 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 very complex, as you can see, but at the same time, the structure was still understandable. This is why you have to have the basic understanding of structure. This would be a supply zone. This would be a high, a low, a lower high, a lower low, lower high, lower low, change of character, phase C. So phase C is basically this change from one trend to the other. That happens in phase C. So change of character, phase D, uptrend, higher high, higher low, higher high, higher low, higher high, higher low. I just hope I'm saying that correctly because those things just confuse me. So you see the same thing over here. And then phase E is safer to get in on an entry because we break above the resistance level. So this is a break and retest of the resistance level, confirming that this is actually, an uptrend now. So this is kind of like the confirmation entry aspect, which is the phase E. So once you identify a schematic which is around phase E, this is still an opportunity to enter. Now, how do you know a schematic is coming to an end? You see the beginning of the accumulation. So phase A is basically telling you there's multiple manipulations happening and price is about to build a support and resistance level. As you can see, the support, the resistance. Sorry, the resistance, the support. This is the resistance. This is the support. The resistance is stopping price from going higher. The support is holding price from going lower. So the support is kind of like saying, go up. And the resistance is like, stay down. So that's the concept of support and resistance. So this is the support. This is the resistance. Support, resistance. Support, resistance. So the switch from bullish to bearish or from bearish to bullish happens at phase C. So from bullish to bearish would be on a distribution. So this is an accumulation that happens at the discount of a trend. So this is a bearish to bullish. So this is an accumulation. On a reaccumulation and redistribution, this happens at continuation of a trend. So if you're looking at a reaccumulation, which is a continuation of an uptrend, just price reaccumulating. Okay, so this is an reaccumulation right now. The phase A is also the first part where you see price, starting to accumulate. You start to see some little manipulation in the uptrend. So the uptrend doesn't look as clean as it's supposed to. Then on the phase B, you start to see the manipulations. Price clears out a high, then clears out a low. So this is kind of like similar to all schematics from accumulation, distribution, reaccumulation, and all. The phase C is also the switch where you see price going bullish. The phase D is where you see an SOS on this one, and the phase E is kind of like, we are gone. So this on the reaccumulation and the redistribution, you can now have an understanding of what these phases are and how to use them. You can now basically use them to understand what is going on within the schematic, and you now know why you have a phase A, B, C, D, and E. It's there to help you understand the period in the market and when you should be looking at an entry or when you should be patient. Okay, so I'm going to take you guys to the live chart now. Let's look a little bit into the live chart. I'll show you an example which I have on gold. It's currently at a phase B, I think. So I want to show you why I decided to do this video on the phases so you can also understand it as well. So on the screen, what we have is gold, 4 hours time frame. This is the current chart, and this is my prediction. I shared this video was made after this chart has been shared to the Telegram community. So if you're in the Telegram community and you are following up, you should have seen this chart shared on Friday. And on this chart, we are currently in phase B. Now you can see the schematic on the screen is a little bit smaller, but just hope you can see. So we have the buying climax, which is what I identified here. The ST, which on the schematic went above the buying climax, but on this it doesn't. But I still confirm this to be a reaccumulation because, as you can see, we are already in an uptrend. This is already an uptrend. So how do I confirm this to not be a distribution and price is still bullish? We haven't really seen a major break in structure. The blue line identifies the structure of the trend. So what we have here is an uptrend. Okay, so price is still bullish. This is likely a continuation pattern. This is price just accumulating for the uptrend. All right, so there's no formal break of structure or any of that. So that's why I say this is a reaccumulation and not a distribution. So we have this confirmation also here where we see the selling climax pattern showing beautiful, similar to what we have on the schematic. And then we have this happening with price currently testing the equilibrium level of the range. So this is basically a kiss into discount, which can also continue the trend to the upside. So we can't confirm this for an entry officially because I told you guys where we say the changeover would be in the phase C. But at this point, you can see I'm also giving an insight to what I'm expecting, using this little info I have with Wyckoff. So you can basically do this. It's not something, a must that you should be in phase D or phase E before you're using Wyckoff or you're trying to get an entry. You could be trading and you can have something like this. Okay. It's all up to your time, and how you can do this. You can have something like this. You can have something from here and have this as your take profit. It's all based on how patient you are and how your risk management and trading plan is. But you can basically trade any part of the Wyckoff schematic you find yourself in at the moment. Wyckoff is there to give you an insight to what's going on, so you can know how to use it and how to make sense of it. So you can actually trade the phase B, trade the phase C, trade whichever phase you want to trade, as long as you know what's going on and what to expect next. Okay, so this is phase B. The safest time to trade would be the phase D. So we are still kind of like far from the market, but at the same time, using structure, you can see on the lower time frame, you could have gotten an entry from this point, with your stop loss below the selling climax, since we know, price is not supposed or is not likely to go below that till we clear out the, buying climax and XT to give a confirmation to the uptrend. Okay, so Wyckoff can be used in so many ways. It's just there to give you insight to what is happening on the chart and how you can actually use it. Okay, so thank you for joining us on this episode. This is a short one. I'm trying to, get slow since the video is getting more complex and it's kind of like getting difficult to understand as well. So I'm trying to give you guys bit by bit so we can be able to understand how the concept work and then probably, follow up with more episodes. All right, so thank you for watching. See you on the next one.